Welcome to everybody. So we're here today with Guy Bridge from Finpoint to discuss how SMEs can understand the lending landscape and help navigate the ever-changing funding that's available. Just a quick introduction. So first of all, thank you for taking the time to join. It's going to be a 30-minute Q&A session. So we've got some questions for Guy, and at the end you have a chance to write in the chat, and we'll ask anything that's particularly been niggling you. Just quick intro from me. So I'm Glenn. I'm the Chief Product Officer at Quick Real Time. We make Credit Passport. Our Credit Passport, our goal has always been to help SMEs understand and navigate funding and finance on the market. So obviously we do that through helping them understand their credit score and help you build resilience and grow kind of the most strong company you can, and then connect you to companies like Finpoint who can then help you complete that journey and achieve funding if that's your short-term goal. I've got with me today Guy Bridge, who's the CEO of Finpoint. Guy's a qualified banker with a successful track record in management, business development, risk control, regulation, and operations for more than 25 years. And Guy.
Yeah, well, thank you very much, Glenn. It's great to be here and working with your good selves at Credit Passport. I think it's important that, as you say, it's more of a Q&A. We're not here to sort of sell either organisation. It's to try and sort of give a little bit more advice and guidance to SMEs if we can.
Perfect. So I'm going to kind of kick straight off with some questions. Guy, tell me, what's your view on the current finance market and challenges that business finance faces, particularly for small and medium-sized businesses?
Well, thanks, Glenn. Interesting questions to start with. I mean, there's no simple answer. You know, in short, really, the market is still settling down, and the risk appetite from lenders is recovering, obviously, from the circumstances we found ourselves in the last 18, 24 months. And we're still not seeing lending approvals at pre-COVID levels. What I wanted to do is briefly share some statistics from the government, because I think this just puts things in context, and perhaps people listening won't have seen this. So as we all know, in the pandemic, the government came out with various schemes to support businesses, and overall there was a significant quantum of lending made available. We've got, ultimately, there was over 1.6 million SMEs that were provided facilities, and 77 billion of loans made available. And what's important, and what this table is showing us, is a recent review done by the Department of Business, Energy and Skills for all the schemes. And what we're seeing is that the overwhelming majority of businesses are meeting monthly repayments. It's showing, if you look at the last line, that 4% of all facilities that were made available have been paid back in full. And we've got, as it happens, something like 2% of facilities subject to default, with an additional 21% of firms that applied moving on to accessing one of the other schemes as pay as you grow, so extending a bounce back facility or restructuring a civils facility. And I wanted to share this information because it does put everything in context as to the environment that we're still in. I think the encouraging thing is that there were lots of doom mongers that were saying that there was a huge amount of fraud in bounce back loans. Yes, there is a small proportion, but there was also a lot of defaults. And I think from the circumstances and the environment, economic, macro environment that we've seen in the UK and globally, to have a 2% of default, and there's not to say that those are all going to go bankrupt companies, but it's a much lower figure than what people would have predicted. So I think, if you haven't seen those, that sort of puts things in context. But it's not really all a negative outlook. As I say, it could be a lot worse, or could have been a lot worse, these numbers. And what we're seeing is that the clearing banks in particular, who still provide the most support for small businesses, are all looking, and they have been looking through the last 6-12 months, as to how they refresh their approach and the way they treat and interact with their SME customer bases. So I think that's important and important to remember, because they are a core part of the market in terms of supporting lending in the UK. And then we've got, as we all know, an increasing array of alternative fintech providers. I won't mention any names, but there are a broad selection, and more will be. Some will be more familiar than others. But they are providing a huge range of debt products, and the fact is that they can compete, or starting to compete, with the pricing of the mainstream street clearing banks for businesses, which is good news, because perhaps pre-pandemic there was a huge gap, and now there is a closing gap in terms of the competitiveness of the various products, which is good for businesses. And we've seen more businesses become more comfortable with using a digital solution. So the fintech and alternative finance providers are more savvy, they're smaller and able to react quickly and use digital tools, more so perhaps than clearing banks. But it's encouraging for businesses. So all in all, I suppose, Glenn, to answer the question, it's a challenging market, and it will continue to, because of the uncertainty that we have with the latest variant of COVID. But I think that the key thing for businesses, if they're looking to borrow, is to be prepared. They've got to be able to show the future and what they would anticipate through, whether it be a forecast or a good story, because the metrics for risk that a lot of lenders will have relied on, past performance, certainly the last 18, 24 months, they're not going to be indicative numbers of how well that business has performed. So I think it's continued uncertainty, but it's not all doom and gloom.
Thank you. No, that's really interesting to hear, and I guess that points to products like Credit Passport, who kind of show an up-to-date credit score from from up to the minute data, rather than looking at data that was 12 or 24 months old. Actually give lenders and other banks a clearer picture of the SME through the pandemic, what's happened, because we've seen some of our customers have actually really done well. They've been in the right place at the right time, digital products, etc., and they've had a very positive uplift. So it's good to reflect that as well as just reality. So I've got another question now, which is the debt products now, because this is looking back at what happened, and obviously coming through that, I guess there's more newer facilities and more creative lending coming to place. So what are people applying for at the moment?
Well, again, if you can share another slide, and it's not a huge presentation, so we've only got a couple of slides actually, but it helps put things in context. I mean, what this is showing is that most businesses are looking for some form of working capital. I mean, if we take business loans and invoice finance, which is the obvious two metrics as to the way this table is divided, you've got 57% of businesses that we see, and this is real life statistics that come to us, applying for a working capital facility of some shape or form. And I think that is where the challenge is going to be, because for assets and property finance, there tends to be security, obviously, by nature of those product types. And those then lenders are being more flexible on, whereas the working capital solutions that might exist, and increasingly they're more competitive or varied than they might have been in the past. So invoice finance has been something historically that businesses haven't used as a means of financing, but nowadays it's become, certainly with the use of technology, much more readily available in a way that suits the business, and I think that's key. So hence that's why I segmented out, because we're seeing a lot more people actually use that facility. So overall, as I say, it's working capital, and some other statistics on the slide, just for useful metrics for you. But whilst it says the average amount that we're seeing, I mean that's through Finpoint as an intermediary, average requested of 100,000. If you look on the table on the right, then obviously there's still a large proportion of companies coming to us that actually are looking for relatively small amounts under 25,000. That's nearly 50% of those that come to us. So, it's right across the board in terms of amount and what people are asking for, and across the spectrum of debt products we're seeing categorised there in the key four. But as I say, it's largely working capital.
Excellent, thank you. So just asking about the recovery loan scheme, because the recovery loan scheme had a lot less publicity than CBILS or bounce back loan, and I think it's less clear for people what it is, or even if there's still time to apply or how to go about it. So could you just tell our listeners a little bit about the recovery loan scheme and where that's at?
Absolutely, and a good point you raised, because it's the only government loan facility that's now available, and effectively the recovery loan scheme, or RLS as it's become known, is a replacement in many ways to what used to exist before the pandemic, and that was called the Small Firms Loan Guarantee Scheme. So it is quite involved to apply. There are, it was introduced from April when Bibbles and Sibbles ended, and it's now been extended in the recent autumn budget to still be available to the end of June 2022. So to answer the question, yeah, still time to apply for it and get a facility. And it's open to all businesses, who want to borrow up to 10 million, and no personal guarantee is required for the first 250,000. What I would say, and it's worth bearing in mind, it's not been promoted because the government didn't want it to be promoted, and the scheme administrator, the British Business Bank, has made it quite clear that the accredited lenders, and there are 78 accredited lenders, should offer an alternative product of their own before they offer a recovery loan scheme. Now, in practice, that's not the case for all. Sorry, Glenn, you were going to say.
No, I didn't know that. That seemed very interesting.
No, so it is key that whilst it's there and available for businesses, that they should be looking and offering their own product first. Now, the good thing about RLS is the interest rate is capped, but then the converse as well is that it's trying to encourage the lenders that are accredited to provide more competitive products. So it's still there. The details on who can apply will change slightly from January next year. So for the 6 months up to the end of June, from January, it'll mean it's going to be a lower amount that can be borrowed. Instead of 10 million, it'll be 2 million. And there's one or two other changes which I'm happy to answer questions on. But it's still, you can apply for term loans, overdrafts, invoice and asset finance, so all those key products. And if you already have a bounce back loan or a Sibbles, you can still be eligible. So it's worth applying, and through Finpoint we've got a variety of lenders that can facilitate. So if you were looking to do something, feel free to come through our portal.
Perfect. I'm going to ask you a little bit about that in a second. So just how can our customers, how can businesses improve their chances of getting approved for finance? What kind of prep should they be doing?
Well, one of the simple things is using a service such as a credit passport to actually put in context where they fit in the ratings and to get an analytics on the company. But I think if you're using those sort of tools, it's helpful, because running the financial side of a small business is challenging. It's not everybody's speciality, and if we quote one statistic, it's apparently only 5% of SMEs in the UK have someone with financial experience or a finance director. So it's often helpful to have a third party, and again, one of the options you could consider is the service that we offer, because we can help. But the key to success for any business is going to be open. That they've got to be open and transparent in terms of the information that they share and are going to make available to lenders, because you can make as many applications as you like, but if the lender will find out some of the things that you'd rather they didn't, and it's just not worth your time. And it's better to be finance ready and try and address those concerns, or be honest and upfront. Say, look, I've had a couple of bad debts in the last 6 months, but these have now been resolved, but I do need some flexibility with financing, or whatever it might be. It's very important to prepare and to share financial information, and forecasts. The more you ask for, the more detailed they have to be. but you should have a forecast and a plan for what the expectations of the business. And I think too many businesses sort of squirm because they've got to provide a personal guarantee. And I think that is something obviously to be mindful of, but it's not something to fear. I think you can limit your exposure under a personal guarantee. And if you look at it from a lender's point of view, they would be saying, well, why aren't you prepared to back your own business? But it's not something to fear, and it's certainly something to talk about, because some lenders will actually say, okay, well, we won't actually require it, but if there's a trigger in due course, we might ask you to provide at a later date. I mean, I think the basic advice that I would always give to an SME is to have a one-pager as to why you need the funding and how it can help your business grow. So if you're actually telling a positive story, we all know that you might be just needing working capital, but if you're actually presenting it in a positive light, a lender's going to be much more interested to help. And I think lenders do actually want to support businesses. So it's down to the business to sell their story and to be transparent in terms of what information they provide.
I guess that's where Finpoint can help. I mean, so I really like the Finpoint hub, but if you want to spend a couple of moments telling people how Finpoint works and how you can kind of assist businesses in going through that process, that might be, if you say, new to them if they haven't got financial support inside the business.
Yeah, thanks for the opportunity. Yeah, I mean, we're a financial intermediary. We're regulated by the FCA, and essentially we're using technology to facilitate access to finance for SMEs. The way we operate is unique compared to some other competitors in the market. The service is free to use, and we've got over 130 lenders that we can access. And you're putting information in once into a virtual data room, and that's getting shared only if you choose it to be shared with relevant lenders that can actually provide facilities. So you can use it as a tester and get a view from a series of lenders, and it takes out some of the difficulties in applying for individual lenders, some of whom you might not even ever have heard of, that might be a more appropriate to provide you with finance. And the system, because it's tech driven, will collate data and bring it in if you share information through open banking or through your cloud accounting system platform. We can't obviously guarantee success, but in terms of those businesses that come to us, and we partner up with a couple of large industry organisations in the UK, one of them being the Federation of Small Businesses, and that is evidence that I think that we operate a very open and transparent process, and the feedback has all been positive. But as I say, we can't guarantee success, but we're very much aligned, I think, with Credit Passport's own values in this regard. It's ultimately to help the small business, whether it be in preparation for raising finance, maintaining their credit status, or being able to continue to grow in the way that they would like. So it's as I say, free to use. And please do go and have a try, because your information won't go anywhere before we've spoken to you anyway.
Perfect. I think it's important to note that last point. You do actually speak to the individual companies as well, because I think that's one of the key things, that even though it's a digital platform, there's still a human and alongside you helping. Okay, so that's the last of my kind of formalized questions. But what I do want to do is jump to any questions we've got from participants, and we do have one question. Thank you, Jenny. Jenny's written, I'm going to read it straight out. She's the co-founder of a startup based out in Hong Kong, which is building a platform that can help SMEs access better funding options. Oh, I see. Very nice. And be able to start, build and grow new age businesses. So that's interesting. Jenny, so the question before that, actually, I'd just scroll up for you, is you've just read it out. With the pandemic changing the way the world does business, in particular SMEs, we are seeing a surge of new digital native businesses, native business models really experience breakout growth. And there's a new breed of SME where they're serving customers end to end in a digital way. For example, social commerce, content creators, SaaS, niche marketplaces. How do you see the lending landscape catching up and providing innovative finance products that serve these segments who are still so hard for incumbent banks to wrap their head around? and what are the barriers, and how should we overcome these barriers together? That's a very detailed and good question, actually, Jenny. Thank you.
Yeah, a challenging one. So, if the first bit's on the lending market, I think I've answered some of that in perhaps the earlier question. I mean, it's going to remain challenging. There's no question about that. In terms of barriers or how it's going to develop, well, back to your point about emerging companies. I mean, in the UK, certainly, I can't speak for other jurisdictions, but there's a lot of early stage companies that are coming and applying and using the Finpoint service. And I'm sure that's the case with Credit Passport as well. So a lot of those businesses, they're quite opportunistic. They haven't necessarily done a huge amount of prep, and they expect funding just to be achieved. And they also feel and maybe equate debt with equity. And they feel, I need equity, or they want support for their business, but they haven't really got a huge amount of equity behind it already. And raising equity is completely different from obviously raising debt. And generally speaking, that is a problem that we see. So early stage businesses, there are less opportunities available, no question, and it is a barrier for funding. In the UK, there are 3 or 4 lending institutions that are particularly active. But again, you've got to have a very strong case and a core equity base. And generally speaking, support or a client base that can evidence the forecast that you're making.
That's interesting. So I have also seen, sorry, I was just going to say some kind of different lending products, like one specialised around a share of card payments, and I guess kind of a different way of looking at it. So they say if you turn over a certain amount on card payments each month, then we can, it's not even really lend, we can kind of take an element of the repayment coming from the card payments, and quite kind of, let's say, innovative stuff based around SaaS or online business.
Yeah,
I think that's also what Jenny's
right.
asking.
Well, that's a good point, actually, Glenn. I mean, merchant cash advance as a product does exist. There's many providers in the UK, but again, yeah, you can access that as a fairly early business, particularly if you're a sort of retail shop that is just trying something new and it's very successful in a couple of months. Then, yeah, that is a very useful form of finance for an early stage company, because it's based on your actual turnover and the business you're doing. So, yes, forgive me, that is something that we can certainly help businesses with. But if it's purely for more equity-based support for a company and equating that for a debt, then it's much harder.
Yeah, definitely. I mean, just to quickly put a note on the Credit Passport, one thing that Credit Passport does give, as I said at the beginning, is as long as the business is more than 90 days old, we can produce a credit score. Not all lenders will fully take that into account, but it's another aspect where these thin credit file companies we can still demonstrate growth, stability, activity in a way that the traditional products wouldn't do. So there is definitely a movement towards that. Open banking's helping drive that as well, the cloud accounting connections. So the more connections, API connections and data that flows from these newer companies, the more lenders will be able to react to that data coming in and being available to them, and these innovative lending products will start to come out. But it is hard for the banks to wrap their head around this. I know banks are pushing towards trade finance as well, but of course you need the invoices out there, but it's another way of getting cash flow to smaller companies or newer companies. We've got some other questions as well, and one about cash flow forecast, which you've alluded to, getting like a one-pager business plan ready. So the question here is, what are the important things that should be considered when preparing a cash flow forecast?
Well, I think it's to be as open and honest as possible. I mean, the key thing is you've got to have a realistic but forecast, and you've got to be able to demonstrate good cash management for a lender. I suppose the fundamentals are: do you have a system for tracking your payments? Have you agreed clear payment terms when signing new contracts with clients? What are your payment terms for those in your billing process? And do you have a process for chasing up late payments? I mean, there's lots of tech solutions out there now, and reference back to what I was saying earlier on invoice finance. If you're using that type of finance, then some of that helps with the cash flow management. But so I think the important things to consider though are, have you got a weekly and there's I would certainly recommend doing something on a weekly basis, even if it's only sort of at a high level, to make sure that you're on top of your cash flow and receivables. So the other thing I suppose to consider is that contingency, because there's always an expectation and a forecast will be not necessarily achieved in the way that you would like it. So it's to keep that updated on a regular basis, and if there are peaks and troughs and things that you're not foreseeing, you've got to be aware of those and maybe have some additional cash or working capital to facilitate that slight discrepancy, as it were.
Actually, yeah, it wasn't meant to be a sales-based question, but actually just to let everyone know, we've got a product coming out shortly in the next few months, which is a kind of cash flow forecast plan generator based off of some inputs that the SME gives to help SMEs put that together in a kind of structured way. Called it Credit Passport Plan. So it's coming early next year. So that'd be quite interesting.
Yeah, but you're right to highlight it, Glenn, because I mean it's a key part of financing. If you're doing import or exporting, then it's some form of cash flow finance is what is often sought underneath that, bridging those short-term funding gaps between the sales process. So it's key, and there are increasingly other tools, and if you've got a new tool coming out, I'm sure it's going to be very, very useful.
Yeah, absolutely. Okay, fine. I think there's time for one more question, just to squeeze it in quickly. Got a couple here. I'm going to try and choose one. Okay, so somebody very specific is asked, they have an import-export business. What sort of funding should they be looking at specifically in that area?
Well, again, I've alluded to it on the basis of that, a great opportunity for, a cash finance type solution in terms of giving the flexibilities. I mean, two common types of cash flow finance are going to be, the straightforward trade finance in terms of, what you're selling goods. It isn't purely for import or export finance though, and it's based on obviously your inventory and the strength of your counterparties. So, but invoice finance per se is one of the key ones for that. It's just cross-border as opposed to domestic, and there are a variety of different products that are out there from the lenders that are on our panel. So we're not seeing a huge growth in that. I must admit, the pandemic seems to have sort of lessened the demand, certainly that we've seen through our platform. I'm not saying overall, but it's some form of cash flow finance that is going to be available for those that are looking to export business.
Oh, I wonder to what extent Brexit has impacted that as well.
Yeah.
It will come at the same time. So,
absolutely, yes. Well, I was trying to avoid that as excellent.
Okay, fine. So let's wrap up unless there's any more questions. But just on this final slide here, we're very happy to hear from you. Please do get in touch. We'll share an email. We'll share an email with our contact details. You can reach Guy at support@finpoint.co.uk or me at g.caddo@criff.com. And yeah, thank you. Join again next time. And thanks for your questions.
Lovely. Thanks very much for organising. Thank you.